Welcome to Market Momentum. So, the big story moving the markets right now, it's all happening in Washington. The idea that the U.S. federal government might reopen is sending some serious waves through the stock market. But the ripple effects on other assets, like gold and crypto, well, they're telling a whole different story. Let's break it all down. Okay, so here's the game plan. First, we're going to dive into that rally in U.S. stocks. Then, we'll get technical and analyze the really critical levels for gold and silver. After that, we'll figure out why crypto isn't exactly joining the party. And finally, we'll wrap up with a super important note on investment strategy.
All right, let's get right into it. The main headline that's pushing prices up right now is this growing feeling that the U.S. federal government is about to get back to business.
This is the million-dollar question, right? It's what every single trader is thinking about. And while nothing's official till it's signed, the market, well, it's already started placing its bets.
That's right. All the positive movement we've been seeing lately tells us that investors are already pricing in a good outcome. They're not waiting for the final handshake and the press conference. They're acting now because they expect a deal is just around the corner.
And you can see that bet playing out right here on the chart. The S&P 500, the Dow Jones, they're both looking pretty healthy. This rally seems to be picking up steam, but as we're about to see, one of these indexes is really leading the pack.
The real star of the show, though, according to this analysis, is the Nasdaq. It has just shown incredible strength, and it's still a preferred index to watch. The momentum is so strong that the analysis is pointing towards a potential target of 32,000. The thinking here is that even after the official announcement drops, this rally might still have some gas left in the tank.
Now let's switch gears and head over to the world of precious metals. Because for gold and silver, the story isn't so much about U.S. politics. It's more about a technical rebound that has reached a make-or-break moment.
So what are we seeing here? It's something called a rebound rally. Basically, after a period where prices have been falling and falling, the asset gets a little temporary lift. But the key word there is temporary. The huge question is, does this bounce have legs, or is it about to fizzle out?
And for gold, it all comes down to this one number, 4070. According to the technical analysis, this specific price is the line in the sand. Pretty much the entire short-term strategy for gold depends on what happens right at this level.
So the game plan is actually pretty simple. It's an if-then kind of thing. If gold can hold on and stay above that 4070 level, the advice is to hold your position. But, and this is the big but, if it breaks below that support, say it drops to 4060, that's the signal. That's what tells you the rebound rally is probably over and it might be a moment to sell.
And silver is in a very similar situation. It's rallied right up to a key resistance level around $50, and it's starting to flash some signs of being overbought. This just shows you how connected these two are. Silver's fate is really tied to gold's. If gold breaks down below its key level, that's a very strong hint that silver is going to follow, which would be another potential sell signal.
All right, let's shift gears again, this time over to the crypto markets. Because while stocks are having a great time, digital assets are marching to a totally different beat. And frankly, they've hit a major wall.
This really highlights a key difference. Sometimes when the Nasdaq is flying high, it can give crypto a bit of a lift, but that connection is indirect at best. Assets like Bitcoin and Ethereum are global. They aren't directly driven by what's happening day to day with the U.S. government. And that's exactly why, while the stock market's celebrating, crypto's facing its own set of hurdles.
And we can see those hurdles right here. Bitcoin is fighting tooth and nail just to stay above its key support around 10,550. Ethereum made a run at 3,680, but just couldn't break through that ceiling. And even though XRP had a fantastic run, it's now feeling that pullback pressure. It seems like right across the board, the momentum has just stalled out.
So given that all these major cryptos are struggling at these key resistance levels, the takeaway from the source analysis is crystal clear. Just hold off for now. Until these assets can make a really decisive move and break through their barriers, this is just not seen as a good time to be starting new positions.
Okay, and that brings us to our final and, maybe our most important section. We've talked about markets, we've looked at charts, but none of that matters if your personal strategy doesn't actually fit your personality. This is all about you. I really want you to just read this for a second. This is such a powerful and just honest piece of advice. Investing isn't about having a stomach of steel. It's about knowing your own limits. If the normal ups and downs of the market are causing you real stress, that's not a sign of weakness. It's a sign that your strategy might not be the right one for you. And that is perfectly 100% okay.
So how do you handle this? Well, first, be brutally honest with yourself about how much risk you can actually handle. Second, only invest money you won't need anytime soon. That gives you the freedom to ride out the waves. Third, have a plan and be patient enough to let it play out. And finally, just remember that dips and volatility are part of the game. Don't let a drop push you into a panicked mistake.
So as we wrap things up, I'll leave you with this question. Are you an investor who thrives on the data and can stomach the swings, or does that volatility keep you up at night? Answering that question honestly is the real first step to building a strategy that doesn't just work for your portfolio, but more importantly, works for you.
Thanks so much for joining us for this market breakdown. Your subscription and likes will be appreciated.